You are about to find out the key levels for Overstock, ticker OSTK. Now we can see this stock is currently down at about $28. We're pushing into fair value, which is at $27.80. And this stock has had big moves in the past, been quite a nice stock to trade really to the downside as we squeezed out. At least that's how we covered it and that's how we traded it. And so now we're pushing back to this fair value area. So how am I looking to trade it from here? So obviously as a reversal trader, that's how I trade. As we're at fair value between $28 and $24, to me there is no opportunity, so right now I won't be trading it. But if we do get a further move to the downside, we have supports from $22.80, $19.30 and $17.60. So this is when I turn long bars on the stock and will look to take it long. On the other hand, if we start pushing to the upside, we have key resistances at 33, 38. Now, these have both already been hit. So, I mean, they're still strong, but not as strong as they normally are. Again, that's why we traded it on that first move to the upside. And it was a lot cleaner to trade. Again, these are standard deviation levels. You can go back and watch the analysis where we got these levels. And again, we traded to the downside. They caught them quite nice. If you're retesting, less likely that they hold up. But again, they're still going to be relatively good. So it means we do have one added level. So if we do break that recent high and do another run, we have a resistance at 43.50. Now, I do think that's quite unlikely that we see that second run. Because obviously this downward move did kind of just start off that earnings tax kind of justified its high, and then since then we've sold off. So we probably will continue to sell off. So again, I'm focusing more on the longs, which will be at $22.80, $19.30 and $17.60. Now again, there's multiple ways we can trade this. If you're a reversal trader like me, you can either trade the shares. So if we're buying long, obviously just getting long shares, or shorting the outright shares. Now I will never short shares without any protection. So if we are shorting this stock, if we are shorting the shares, I'm always buying calls to define that risk. Because again, imagine you shorted all the way back here at $26. You had no protection. Obviously that ran massively against you and you would have been down about $14 a share, which is a massive amount to lose if you have no protection or you didn't stop out. So always going to have protection on a move like that, but there's also other ways you can trade it. That's probably the simplest. The other ways is just trading outright options, so calls or puts depending on which direction we're trading. And lastly is going to be the vertical spreads, which can be nice when stocks become quite overbought. Like in this kind of case, we traded this one with vertical spreads. The reason for that is you were coming quite overbought. We weren't as sure if we would catch this top right away. So if not, trading the vertical spreads, you give time on a trade, you let it play out. And so you can give it a bit more time. So I think we had 2 months expiration, so it gave us basically 2 months to fall below $38, and then we make our max profit, which we've now done. So that's how I look to trade it. Normally, yeah, through the vertical spread route. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.